this is the gold chart, and if you see that the gold has been continuously going up, especially the last leg of rally. If you see, extremely sharp, one of the sharpest rally we have seen in gold in many of their lives. Daily gold price has been going up. Domestic gold price were going up 100 rupees morning, 100 rupees, then again evening 50 rupees, 75 rupees, like that. So daily gold price has been going up 100 rupees, 200 rupees on a daily basis, which we haven't seen in our lifetime. This type of movement in gold. In 1979 it has happened, but after that now it is happening in international market, and in domestic market also. If you see that this type of rally in gold we are seeing for the first time, the sharp rally. And if you see the world hedge funds, Ray Dalio, he is saying that we have to own a significant portion of we have to allocate a decent portion of money in gold, he is saying, in the portfolio. Then Morgan Stanley says, yeah, you should have 20% of portfolio in gold. And Goldman Sachs says that you should, gold price target is for 4,800. We have just reached 4,000 levels. Goldman Sachs is saying in 1 year time gold will touch $4,800, he is saying. So all these global hedge funds, short-term funds, they all have entered into the gold market. That is the reason why gold price has been going up without any correction. See, generally if you see that when hedge funds and all enters a market, means the price rise will be very high. That no one knows why it is happening like that. Even if you take in our Indian market, when foreign institutions buys for 3,000 crores, stock price will go up very sharply. The same 3,000 crores, if domestic institution buys, the price impact will be much less, because the foreign institutions generally chase price and buy. That is why the price will go up very sharply when they buy. Whereas domestic institutions, they generally buy, keep their price, put a limit order where they will be willing to buy at a certain price only. Whereas foreign institutions, they chase and buy, which will lead to very high price hike. The same way in gold market also, a lot of hedge funds, short-term traders, everyone has entered into the market. That is the reason. That is one of the reasons why we are seeing an unprecedented gold rally in the gold price. And this is the record year for gold. And if you see from 1971, if you see that till date in 2025, the gold price has gone up by 47%. It has gone up. So highest since 1979. In 1979, gold price went up by 136% in a single year. It went up by 136%. After the sharp rise, the gold price did not give any return for many years. If you see that continuously gold price was range bound, especially between 1991 and 2001. If you see that the gold price was a huge underperformer. During this period only, many European central banks, they were selling this gold. I very well know that during 1999-2000 period and all, Bank of England, one of the largest holder of gold, they were selling in the market. At that time the price was around $300 to $75, in that range the price was, and they were continuously selling. That is one of the reasons why the gold went into a huge underperformance between 1992 and 2001. After that only another big rally started from 2002 onwards. I remember very well that I used to watch the BBC during that period. I was unmarried at that time. I used to watch the BBC. So during my marriage in 2002, in 2001 we bought gold biscuit at a very low price. At that time Indian price was around 380, 400, 410 rupees only. And in 1991 when my sister was, my sister marriage was there, at that time we bought gold at 330 rupees. After 10 years, the price went up by just 10-15% only. So there is almost no movement for almost 1 decade, the gold price was. But from there it started going up very sharply from 400 rupees in 2002. Now the price is 11,400 rupees. So it's such a huge return gold has given. The big plus point for India is that the rupee depreciation every year of 3 to 4% get added to our return in gold. That's why our gold price in rupee terms has given much higher return than globally, global gold price. So many of them ask, what is the fair price of gold? See, for a stock we can calculate fair price based on their earnings, based on their cash flow. Various models are available. But how to calculate the fair value of gold? It's a non-yielding asset. Suppose if you buy 10 kg of gold and keep it in a locker, after 10 or 20 years, the 10 kg will be there. You are not going to get any return on gold. It's a non-yielding asset. But at the same time, if you put some 1 crore in a bank deposit, means every year you will get some interest. 7% interest or 8% or 6% interest every year you will get. So the interest yield is there. Similarly, stocks, if you buy, means you will get dividend yield, you will get it. Plus, whereas in gold, the only way you will earn income is by capital appreciation only. Gold, if you bought at 10,000 rupees, if it goes to 12,000 rupees, means you are getting the capital appreciation. It won't give either dividend yield or interest rate yield. So how to calculate the fair price of gold? So what is the fair price of gold? Can anyone tell? Actually, it's a very difficult thing. No one knows what is the fair price of gold. In dollar terms, now it is 4,000. Whether the fair price is 6,000 or 2,000, no one knows. Some of them used to calculate based on the mining cost. So right now the average cost of gold, those who mining the gold in mines, around $1,500, $1,600 are their average price. Some very good mines, maybe the cost will be lower. Some mines where we have to extract a lot of sand and then we have to remove from it, means the cost will be very high. And so the average price is around $1,500, $1,600 per ounce. So how to calculate the fair price of gold? So one way where people used to calculate is the money supply the US has made. See, before US dollar was the global currency, historically people used to have the gold standard. So you can print money based on the gold kept by the central bank. That is how many years it was gone. Then suddenly US came and removed this gold standard, and the US started printing a huge amount of dollars, and they got it circulated in the world, and that has made the medium of doing business throughout the world. So the one way of calculating the fair value of gold by comparing with how much US dollar of money printed in the last 50 years and comparing with the gold price in the last 50 years. That is one of the way of calculating the fair value. So this has been done by this DSP Merrill Lynch. They have done certain calculation in that, and they are told that totally mined gold is this much ton. 218,000 tons of gold is mined in global history. So in the last many centuries till date, almost 218,000 tons of gold has been mined, and in troy ounce, because gold always trade in troy ounce only, it used to trade. The price we are seeing $4,000 means $4,000 means per troy ounce. That is, 1 troy ounce is 31.1 grams of 24 carat, and based on that it is almost 7 billion troy ounce. If you divide it by 31.1 means you will get $7 billion dollars of gold is till now mined. And US money supply, M2 money supply, which is the money supply US dollar done till date, which is the amount of dollar deposits lying in the banks, currencies in circulation, and in the amount of money in the savings account, everything together it is $22 trillion is there. And if you divide this by these two means you will get one price, that is $3,000 it is coming. Additionally, if you take this European money supply also, if you take means and 1,300 is coming. So if we add both this European money supply and US dollar money supply means around 4,484 is coming. And some average price they have taken between high and low, and they are saying around 3,825 is the fair value of gold, which is the present gold price. Around 4,000 it is there, and they are saying that gold has reached the fair value. Now this DSP mutual fund, they are saying, as per the analysis, they are saying $3,800 they are saying, which is near to what we are seeing now. So they are doing based on the money supply. It looks like a reliable calculation, because fair calculation this is. And generally, historically, what we used to see is that when bull market is there, generally market used to overshoots on the upside. Similarly, on bear market generally overshoots on the downside. It will go well above the fair value during the bull market, but on bear market also it will go well below the fair value. That's how the usually the markets used to behave. So gold price, how far it can go, no one knows how far. But generally it used to overshoots on the upside. But wherever it goes, again it may come to this fair value of 3,800, which is the price which we are seeing now, around 10,000, 11,000 range. Suppose gold may go to 15,000, 18,000 also can go, because many of them are chasing and buying it. But wherever it goes, again it may fall to around the price which we are seeing now, 10,000, 11,000 level. That's how they have made their analysis source. How to value the silver? So that is the big problem, because silver, no, many are buying now silver now, silver ETF. The price is 2 days back, suddenly price went up in spite of global prices were remain stagnant. The price went up in ETF very sharply, around 9% it went up. There a lot of buying is happening. See, in ETF, how it works is that the market makers are there, and whenever you put a buy order, if there are no sellers, means the market maker will put the sell order and give units to you, and the equal unit the market maker have to buy physical silver from the market, and they have to keep it in the locker. That is how the ETF works. Suppose if there are 1,000 tons of units there in the ETF, silver ETF, means 1,000 ton of physical silver should be there. Then it is get audited timely, and it should be equivalent. But what is happening now? Physical short supply is there in the market, because when everyone starts buying, means naturally physical demand will come, and there will be a huge shortage will be there. And how to value the silver is a very difficult situation. Historically, no, the silver is valued based on the gold silver ratio, and many times globally, if you see it has fluctuated a lot, and based on that they have come to an midpoint of $64. Right now it is $48, $49 is there, and it is around $64. That is what the fair value they are saying. That means another 30% rally is possible, that they are saying in silver. But it's anybody's guess. But whenever you start buying, there is a huge physical demand, means then price can go to any level, but again it will come to the fair value. You see, there are various things are there. In India, in jewelry farm, Indian household families, they own around 25,000 tons. That's what World Gold Council is saying. So India is the highest, as a country, India owns the highest amount of gold. RBI owns only $850, $880 only. But in that also some problem is there. See, RBI in the last 7-8 years, they have sold the sovereign gold bond to Indian public. Almost 130 tons are there. So when it comes for redemption, RBI has to give that. So even though RBI is having 880 tons, almost 130 tons is on a short position. That means they have bought on behalf of this sovereign gold bond. So RBI holds only 750 tons only RBI holds. But Indian household owns highest, almost 25,000 tons of gold. US Bank, Federal Reserve, they own around 8,500, 8,800 tons of gold they are owning. So that officially US has the highest gold. US want to monetize it when price gold goes very high. That's what everyone is saying. That I will tell, sir. I will tell. So every commodity, there is always supply demand dynamics is there. See, crude oil in 2008, it went to $140. Everyone started telling that without crude oil you cannot live. So crude oil price will go only one direction, that is up, because there is you cannot have many mines. The production started coming down. Saudi Arabia, one of the biggest oil field is there, where the production has peaked out. From here only it will fall. So like a lot of stories came, and they said that 200 Goldman Sachs, now they are saying $480, 4,800 for gold. No, at that time they told $200 or $250. They gave a big target for crude oil. the crude oil price will never fall. Everyone needs crude oil for living. Like that, they told a big research report they gave and said, but nothing happened after 10 years. No, few years back we have seen even crude oil falling to single digits, and in futures it came minus also. So everything depends upon this item, these two important things, supply demand dynamics. So this is very very important for any commodity products, for any products. Let's see how this demand and supply for gold. This is as per for the period 2024 given by World Gold Council, and it's not exactly tallying demand and supply. No, some 400 tons of mismatch is there, and if you see that yearly the mine production is 3,645 tons of gold. So in mines, every year in through mines around 3,600 tons of gold is mined. So every year this is the supply. It is inelastic. Suppose even if gold goes to from 4,000 tons to 10,000, $4,000 to $10,000, you cannot increase the mine production to very high level, because the number of mines are less. Only there is a limit. Whereas suppose if Maruti, suppose if they are getting huge demand for their car, means they can increase the production. Similarly, other items and all, you can increase the production if the demand is very high. But whereas for gold, the mine production cannot be increased in a short term, in the next 1 year, 2 year. If you find a new mine, means it will take 5 years, 10 years to increase the production. So short term, you cannot increase the mine production. That is the every year supply. This is 3,645 tons. Recycled gold, no, where some of the gold people are selling again recycling, that is around 1,300 tons are there. So total supply is around 5,000 tons are there. So demand where it is jewelry demand. So it is one of the biggest demand. Almost 40% of gold demand comes from jewelry. It is 2,000 tons. In India alone, it is around 700 800 tons of gold is there. In the jewelry demand, almost 40%. The investment demand where we buy ETF and all these hedge funds and all buying now, that is around 1,100 tons. So central banks 1,000 tons. So if you ask to anybody why gold price is going up, to any jewelry or any layman, if you ask, the simple answer is globally all central banks are buying gold. So that is why it is going up. That is the answer we are getting from anyone. So how much they are buying? They are buying 1,000 tons, half of what the jewelry demand is, around 20% of overall gold. And technology, in some parts and all, gold is used for making in some technology items and all. Gold is used. Gold and silver. Silver is used in many industrial, solar and many in semiconductor production. All silver is used. Whereas gold, the usage is less. And if you see that for technology, it is 326 tons. So if overall the demand where it is coming is mainly from jewelry and investment. This investment is it is highly when price goes up, everyone will chase and buy. Whereas jewelry when price goes up, no, the demand will start coming down. My personal feeling is that the gold demand will fall very sharply if price is like this. Whereas the investment demand, no, that will go up when price goes up. Because what we are seeing, maybe everyone wants to buy the gold ETF now, gold mutual funds now, because price is going up. So right now the huge momentum is there. That is why the investment demand is very high. But once price starts correcting, but this is the long-term demand. Once people are buying jewelry, it means they will keep for 10 years, 20 years, 50 years, even 100 years also they will keep. Whereas the investment demand is not like that. It will move in line with the price. Suppose if price does not move for 2 years, 3 years, means then the investment demand will come down. Even somebody will sell gold and will buy whichever is hot at that time. So my own personal feeling is that the jewelry demand will come down, but mine production will remain same. The investment demand, what will happen is that till the gold price is very strong, the investment demand will keep on coming. Once the gold price starts falling, means some of them will start selling it. Some of the hedge funds and all, no, they are very very brutal in selling. They won't mind any price. They will blindly start selling, and the investment the demand on that also will come down. So what we are going to see is that the price rise we are seeing, it will continue for some time. And once the price starts trending, we are going to see big correction in gold. That's what my expectation is. Maybe gold price can go to 15,000, 16,000 in Indian rupees. But once correction comes, historically we haven't seen big correction. 10% or 15% drawdown only has happened in gold in Indian rupees. But this time no, price will go up very sharply. But when correction comes, it's not going to be 10%, 5% correction. It is going to be 20%, 30% type of correction. So those who are buying gold in ETF for momentum purpose, they should learn when to exit also. Short term people who are buying this gold ETF. Unlike the jewelry, they are buying for 40 years, 50 years. They no need to mind the price.
So for capital gain tax ETF, something different?
Related like mutual fund only, sir. Like any other mutual fund only.
So what about platinum, sir?
Platinum, say whenever gold goes up means along with some metals are there, silver will go up. Similarly, platinum will go up. 20 years back, the platinum price was much higher than gold. Now the platinum price is much lower than gold. SIP you can do it, sir. SIP through SIP you can do it. The purpose is important. Whether we are buying for short term trading, right now prices is going up. Whether we are buying for momentum or we are going to buy for long term, 10 years to keep it for 10 years, 20 years, 30 years. So that is important. If you are buying for momentum means you should know when to exit.
So the best way to buy gold is pay installment for the marriage time.
Yeah.
So it will average out.
It will average out. Yes, it will average out. Yes, sir.